Jan, shall we start the session?
Yeah, sure, Vishwajit. So, am I audible to everyone? Are we audible?
Yes.
Okay. So, good evening, everyone. Um, I would like to say thank you to everyone to join and trying to spend the evening with us. So, today the topic is about we will try to understand the charts of the stock market. And before we start, let's start with a disclaimer. Anything we discuss here which is related to stocks are for educational purpose and information purpose, and no way should be understood as a suggestions or recommendations or any tips. So this is for only educational purpose. So today's agenda will be supply and demand, the price and volume. We will see through the charts. We'll go through the stock life cycle, which is very important. We'll try to understand the chart, how to read the chart. We'll see what is the difference between the arithmetic chart and versus the log chart. And we'll try to differentiate and try to find the role of this particular chart in different time frames. Then we'll go through OHLC, open, high, low, close of a particular candles, the time frame, and we'll have some quiz. Okay, so if everyone is in, then we are going to start with the class. So let's start with this one. So let's say that there is a person which you can see here, and he has an organization. Okay, so he's a nice organization he has, and the organization have few shares. Okay, so it's very simple. There is a person who owns an organization, and organization has some shares. Okay, so we will not go into how the shares are created, how the IPOs are happening, how we are issuing the shares. So we'll not go into that. We need to have another class for that. Now, who carries how many shares we'll need to discuss here. Let's say the organization name is MyOrg, which has 100 shares, and this is the person which we are talking about. He is the owner named Gyan, who has 65 shares. So that means Gyan has 65% of shares of this organization that we are showing you. Okay, so from the 100 shares, he has 65 shares. So what happened next? For the public, there are only 35 shares. Okay, so we can say that for the public, for trading in the market, we have only 35 shares. Okay, and we define that as a supply. Okay, we have a supply of 35 shares in the market to be traded by public. Okay, public or any other different companies or institutions, financials. Okay, now before we go on to the next thing, let's say what is the price of this particular share. Let's say the price of each share is 100 rupees. Okay, let's say the price is 100 rupees for each shares. So this is a hypothetical example. So what happened next? It is going into the trading zone. So what happens? There's a company called ABC. It's a big company. It's a big financial company. You can name it SDFC or ICICI or Motilal Oswal, or these are the big companies which we say as institutional companies. There they bought 2 shares of this company at a rate of 105. Now, if we discuss in this as the data, we will not understand anything. So why not go for a chart? So let's say this is a x-axis. So for any chart, we need a x-axis and y-axis. This x-axis have a time as a component, and in the y-axis we have a price as a component. Okay, so this is the price, this is the time. So we will be plotting this shares value, price versus time. Okay, so let's say we started 100 rupees. So before we started at 100 rupees. Okay, now the price has been bought at 105. Okay, so the price went from 100 to 105. Okay, so this is how we plot. Now what happened next is we have bought two shares. Now how to show that in a chart? Okay, we have to show somewhere, right? We have bought two shares. Now that's something we are showing in a green bar. Okay, okay, so from 100 to 105 it moved, and we are showing the green bar. Now what is this bar? This bar is showing that there are two shares are transacted when the price moved from 100 to 105. So what we call this? We call this as a volume. The number of share that is traded in a particular movement of a price of a stock is called as a volume. Now why that's a green? We'll know that why this is a green. So what next happened? ABC again came and bought two number of shares again at 95. Okay, now we will plot the chart, and the price movement came from 105 to 95. What happened now? Now it is coming as red. Why? Because the movement of the price from 100 to 105 is a good thing. Okay, now in for good thing we always say it's green. For the bad thing we always say it is a red. So it is a warning sign. So from 105 to 95 the price has came down from 105 to 95. So we say okay, that is fine, but we will denote it by red. So two number of shares has been transacted and we denote it by red. So this is a volume. Okay, so this is a price movement and this is a volume. Okay, and as we go, this is the time. Okay, so price, time, and this is the volume. So next what happened? There's another company called XYZ came and he bought three shares at 100. So we plot it. So that is a good thing. Green bar, you see the green bar has moved up a little bit because this time we shared three. He bought three number of shares. The same happened with Alpha Beta Gamma. He bought three number of shares at 95, and though it went down, so red, and it went up again 105. Now what is you should always learn the what is the underlying meaning of this one. These are big people. Okay, these are big institution people. These are not public people like us. These are big people. They are buying shares 22333. So they are buying shares at a low price. And you see the price range movement is from 105 to 95. There's not much difference. There's a range that is happening from 95 to 105. There's not much movement. The spread is very less. So how much? It's like 12% around that. Okay, the spread is very less. Now we see how many shares have been bought. 2, 2, 4, 4, 3, 7, 7, 3, 10, 10, 3, 13. So we have 13 shares they have bought. So previously, how many shares were there for the public? 35 shares. We have already bought 13 by the big people. Okay. Now the remaining is 22. What is the meaning of that? The meaning of that is we have a supply of 22 shares. And do we see any demand right now? I don't see any demand right now. Okay, so the demand is in red, saying that okay, there is no demand and there is a supply of 22 shares, so that is still good. From 35, 22 is not a big change, still there. So I think everyone understood this. Anybody have any doubt, anything, please let me know. It's very simple. Big company came, bought few shares at different prices. We plotted it. These are the volumes. Okay. And the shares bought is 13, remaining is 22. Supply is this, demand is this. Okay. So we have good number of supply and we have low demand. That's it. Going on to the next. So what happened the other day? ABC, XYZ, Alpha, Beta, Gamma, they came and bought 10 shares of this price in a particular day. In one day, they bought 10 shares at 110. So let's plot that. How? Before it was 105. Now we moved to 110. Now what happened next? You see the volume increased. Before we were trading with 3 shares. This time they are trading with 10 shares in a particular day. The volume increased. Okay, what happened next? There will be some people who will say that okay, the price has moved from 95 to 110. I will take some profit out of it. But they are not the institutional investor. They are not the big investor. They are investors like us, okay, who thinks like this. Okay, they want to get out as soon as they get some profit. Okay, they got some 10-15% profit and they want to get out. So how we denote that? From 110 to 105 it moved, and we denoted it by a red bar, which says that only two number of shares has been sold. So very low volume. Very low volume is sold, but very high volume has been bought. Okay, bought is 10, sold is 2. So what next? Shares are bought 23. So previously we saw there were 13 number of shares has been bought, and this time the institutions bought 10 shares, so it moves to 23. Okay, and the remaining is now 12. Okay, so previously when we start it was 35. We sold, already we bought 23, and 12 is remaining for the whole world to trade. Only 12 stocks are remaining. Okay, so we see the supply is decreasing. You see, previously 35, now 12. The supply is definitely it is decreasing. Okay, and the price is 94, 95 to 110, so not a big change. It's fine. What happened next? We'll see. Okay, there is some good news. What is this good news can be? Good news can be like a company is going to have a deal with a MNC company, or the company has a good earning, or something very good. Okay, they are going to have a new product. Okay, any good news, anything which flash in your news channels or any other place. So what happened after that? The stock zoomed up from 105 to 140, 140 to, 200. Okay, it zoomed up. Why it zoomed up, and why the volumes are we are seeing is a huge volume? Because the supply is now very less, and the demand, because of that good news or because of that earning or new product launch or anything, the demand has gone up. Okay, the supply is low, that is 12 shares. The demand is high, okay, because of any fundamental news and any news, okay, any good news, any fundamental news. So the stock moved up, zoomed up, because the low supply, high demand. Okay, so that is how the picture is. So previously you saw the movement is not much, it is in the range, the volume was low. This time you see the movement is high, the volumes are high, there are people who are still selling. Okay, the volume of which are sold are very low, and the volume which are bought is very high. Okay, so that was the first stage, this was the second stage. Okay, it's very simple. Institution buying another 10 shares in a particular day. Good news came, shares zoomed up because there are only 12 number of shares uh, to be transacted for the whole world. Okay, so there will be foreign investor, there will be some investor, they will still buy, come and buy on that particular good news. What happened next? What happened next is people will be taking their profits. Okay, People will be taking their profit. So that is why we see some red candles here, red bars here. Okay. Now let's say ABC has also come and ABC company sold two shares at 205. Okay. So previously the share was 200, it moved to 205, and the big institution company called ABC sold at 205. You will see the volume is now very low. Okay. Then there is another company who came, ABC again, he came and sold the same number of shares at 195. Okay. And you see the volume is still low. XYZ company came, he sold his three shares at 200. Okay. And then Alpha Beta Gamma company came, he sold his three shares at 195. And again, he sold his another three shares at 205. Okay. Now you see this is the same picture that we saw in the first stage. Okay. Where the movement of the price is not much. Okay. And the transactions are very less volume. Now why does happen that? Because these are big institution players, they cannot sell their whole shares in one go. Okay. That will be a problematic for the market. Let's say like this ABC company will share crore number of like maybe 100 or 10 crores of shares in one particular day. What will happen to the stock market? So they will always sell the shares in a very low numbers. Okay, you need to identify when that happens. Okay, so we'll tell you about that. So what happened next? Shares sold is 13, remaining is 25. So we saw before it remaining was 12, now it is 25. So what happened? The supply zone has increased. The demand has not changed much. The demand is there. There's nothing, no news, nothing. So demand has decreased a little because of the market has moved from 100 to 205. So demand has gone a little bit down, but it has not decreased much. And supply has increased. Supply increased, demand is almost there, and the price movement is not much. Institutions are selling. Okay, what happened next? What happened next is one day ABC, XYZ, and Alpha Beta Gamma they came, I mean the big institutions company they came and they sold six shares of their at the price of 180. Remember the price was 205 before, it moved to 180. Okay, so what is the volume right now? The volume is huge because six number of share has been traded for this movement from 205 to 180. That's a huge volume. What happened next? The volume again there will be some buying, definitely. People like us will buy on this downtrend. Okay. So it moved to 180 to 190, but you see the buying volumes are very low. So who is buying? Not institutionals, not somebody like us who is buying. Okay. So what happened next? Oh my God, there's a bad news here. Something gone very bad. Our earnings are bad, or the new product launch that happened didn't earn that revenue, or some deal got cancelled. Something happened. Okay. So on this news, ABC, XYZ, and Alpha Beta Gamma, they sold the remaining four shares at 165. They want to move out as fast as possible, so they moved out at 165. Okay, here the volumes are high. There will be some buying, and the buying volumes will be low. So it moved to 150 with the low buying volumes. The share sold is 10, remaining is 35. So now we understood the 35 that was there in the first stage came back to 35 in the fourth stage. Okay, because these institutions sold all their shares. Okay, so then we say supply is high, and what about the demand? Because of the bad news, the demand has become low. What happened when the supply is high and the demand is low? The stock goes down. The price goes down. It's very simple. We know um, the playing of supply and demand in the market. That is how it plays in the stock market. Okay. So to summarize everything, okay, we'll summarize now everything what we learned from the first stage to the last stage. First, there are some institutions that came on and they bought few shares with a low volume. Nobody knows when they bought. Nobody knows. They came and they bought. That's it. With a range, and this is called accumulation. Okay, so they accumulated the stocks in a particular range where within low volumes, okay, somewhere 2 shares, 3 shares, 2 shares, 3 shares, something like that. Okay, nobody knows, okay, when did this happened, but they accumulated. So this is called accumulation stage. It's very important. What happened next? Some good news came and the stock zoomed up with a high green volumes. And what we say up to that, it marked up, it went up. Okay, this is a stage 1, we say this is a stage 2. Okay, this is accumulation, this is markup. Okay, then what happened? Then what we see, the third stage where this institutions try to sell this particular stock. Okay, and they also sell in the low volumes. Okay, so that nobody knows about that we are selling. Okay, so they sold this stocks here, right here. Not all, few. They sold few. Okay, and that we call as distribution. Why distribution? They distributed the shares among the public slowly. But the public doesn't know. Public still buying, but they sold it. Okay, and then what happened is a disaster where the stock moved down with a heavy volume. Okay, and that we say decline. Okay, or we can say markdown. Okay, with a high volume. Okay, so this is called accumulation, which is stage 1, where shares where the institutions try to buy the shares at a minimum price. Okay, and in such a way that nobody knows about it. Sorry. And then it zoomed up on the good news that we call markup. And then this is a distribution where the institutions again try to sell the stock without knowing other people that we are selling the stock with a low volume. Okay, that is how we don't know that they're selling. And then this is a decline that happens with a huge volume where we lose everything. Okay, so anybody has any questions on that? Anybody has any questions in here? It's very simple. This is stage 1, this is stage 2, this is stage 3, and stage 4. This is the whole life cycle of a particular stock. A particular stock will always go through this life cycle. We'll show you some example definitely. But any questions on this? Any questions? Any fundamental questions? Any questions that anything we don't understand here? Anything? Any doubt? Anything? Please ask. Okay. So do we have any questions here from anybody right now? Anybody
I
pinged
think
anything?
anyone can do unmute themselves. They can ask us over here, or
Okay.
they can. As of now, nobody has written anything on a chat.
Okay, fine. So if there's no questions, anything, so we understood that you understood everything from here. Okay. Now the question is that I'm going to ask here is where we need to trade. The first thing, do we like this one, or we would like a ready-made one that we copied from somewhere? Okay. So this is a very simple one, which is there, which here you see accumulation is happening. This is we call stage 1. Here we see stage 2 where the stock market zoomed up. Okay. Here we see the distribution where the institutions sell their shares. Okay, and here it is stage 4. What happens next? Again we go to accumulation, again we to go to stage 2 markup, again we go to distribution, again we came down. So this is the life cycle of a stock. Okay, now we need to decide where we need to buy a particular stock. Where we need to buy, do we need to buy a particular stock, or should I ask where we need to trade a stock? Okay, trade or invest a particular stock. Are we going to do it in accumulation stage? Are we going to do in a markup stage? Are we going to do in a distribution stage or markdown stage? At what stage we need to trade it? So that is a very important question, because getting the knowledge of a stock market is other thing and earning out of it is other thing. Okay, so how to do that? Normally we only are concerned on stage 2 and stage 4. We are not concerned about the other stages, though we take accumulation and distribution into the analysis part, but we don't trade here, and we don't trade here. We only trade in stage 2 and we only trade in stage 4. Okay, so that is our way of working. Okay, our way of trading.
So again, one of the answer we got is from Subrat that we should do the trading during the accumulation stage. Can you bit
Okay, that's
brief
fine.
on that?
Yeah, yeah, that is fine. That is fine. Whatever your priority, whatever you think is the right thing. Okay, now we will show you the live example, and from there we can know what we can do. Okay, let's say Reliance. Okay, so let me go to the candles. Does it look fine? Okay. Okay, before I go that, I will tell you something about the chart. Okay, so from here we understood what is happening. So let me complete the chart. Okay, so this is a time, this is a price, this is a price versus time, and this is the volume. Okay, so that is what a chart will contain always: a price, a time, price with respect to the time, and a volume. Okay, so that is how a chart is here. You see, this is a chart, this is a price movement. Okay, this whole this whole thing is called chart. Okay, and this is the time. You see, June, July, August, September, October, November, December 2022, till this time. This is the time. Okay, so this is this is what a chart contains. This is a price. You see, this is a price of 1500, 1600. Okay, if you move up, you'll see this is a price. Okay, so this is what. Now, where's the volume? I cannot see the volume. The volume is here. You see, these are the high volumes happening when the price moves up. Okay, you see, there's a high volume. Okay, before that, you see the consolidation happening in the low. So let's show you what happens when you buy at the accumulation stage. Now, can you identify which one is, let me remove all the drawings. Okay, can you identify what stage the market, this is a chart of a Reliance Industry. Can we identify which one is stage 1, which one is stage 2, which one is stage 3, and which one is stage 4? So let me tell you which one is what. So this is a stage where you see the market is going in a range. Okay, in a range. So this is called as stage 1. Okay, this is called as stage 1. Then the market zoomed up. What happened here? This is called as stage 2. Okay, this stage. And it is still in the stage 2 phase. Okay, there was a slight decline here. Okay, which always also we can say this is a part of stage 3. So let's say this is a part of stage 3. Okay, do you see how the stage 3 happened? It is happened in a range. Okay, this 1, 2, 3. Okay, this one happened in a range. Okay, so this is a range. Okay, so stage 1, stage 2, stage 3, and this is a huge decline that happened, which we can say stage 4. Okay, now Subra said that we should buy here. Okay, that is fine. We can buy here. There's no problem in it. Now let's take the date here. Can you see? The consolidation start around 15 June 2009. Okay, 15 June 2009, or we can say June 2009 it started. Okay, consolidation, or we can say accumulation. Okay, where it end? It ended, it ended around 2017. Okay, so from 2009, if you have invested in this particular stock till 2017, you haven't got anything. Did you get your even you don't get your bank interest money from here? Okay, so this is a dead zone. This is a dead zone where price don't do much here. Okay, it will keep your money here, and um, it will be not productive. The money here is not productive. Okay, this is good for analysis, like who is buying what is happening here. It's good for analysis, but not for any trade activities, not for that. Okay, so what happened here, it zoomed up and it gave a huge percentage. Okay, this is stage 2. It zoomed up and get from 597 to 1594. Okay, now I'm not saying that you should buy here and you still sell here. That is not the way it works. But you should be a part of this stage 2. Okay, you don't have to be in here for the full time. You should be a part of stage 2. So it's very few people buy here, because we as a retail investor, we always think buying it, because you see here, for us this is a high, it's not a low. Retail investor always buy, always very afraid of buying here. We as a people very afraid of buying here, because we say that the stock is very high. We don't want to buy a stock which is high price. We will buy when everybody sell it, and we will buy at a lower prices. Okay, but that didn't happen. The low price never came, and that zoomed. At very late stage, we realize, okay, we should have bought here, but we didn't buy. So let us buy here. Why not buy here? Okay, and then we buy here, and then zoom, things goes bad. Stage 3 also, we thought that this is a good time to buy, but still it goes bad, and we goes into the decline. There are few retail investor who buys here too. Okay, they buys here too. They see that, okay, I'm getting at a very cheap rate. Okay, so they buy here. From 1554 to 868, many retail investor buys here. Okay, when people are selling, there are small investor who are buying. Okay, so that is stage 3. So that is up to a person who where he buys, up to an investor risk appetite. Okay, but stage 1 and stage 3 are very difficult zone to buy or sell. Okay, so that is what we think. But yeah, it takes a lot of experience to understand like what is happening, what happens, what will happen next, where to buy, where to trade. It's a lot of experience. But our main motto is here to make you understand that any stock goes through stage 1, stage 2, stage 3, stage 4 stage. Okay, so let's do something else. Okay, let's do open Aarti Drugs. It is a very good stock. Okay, tell me at what stage is this particular stock? Okay, so before that, I want to show again you, this is a stage, accumulation stage, stage 2, stage 3, stage 4. If you understand this one, this stage, then half of the job is done. The next thing you want to see is when to buy, at what price to buy. That is what. So do you see anything here? Okay. So what I see, this is a clearly stage 1. Okay. Accumulation is happening here with a range bound activities happening. Okay. And then what happened? It zoomed up. Okay. Surely it is a stage 2. Now we are not advising to buy anywhere. We are just saying that this is stage 1, this is stage 2. That's it. And we will be having stage 3 and then we'll having stage 4 if things goes well. Okay. So let me see Maruti. We'll see. We'll take good examples. We'll see how the things were. So we'll remove all these drawings. Okay. Let us take the monthly chart. Okay. So this is a monthly chart we are taking. We will describe about what are the daily, monthly, weekly. We'll tell you. But here also you see. Can you tell me what are the stages? Okay. Take few minutes or few seconds to know what are the stages where you can see. I will take 10 seconds from here. Okay. So I think everyone must have already guessed it. So this particular stage is a range bound, or you can take this stage. Okay. So this stage, I can say it is in stage 1. Okay. This is a stage 1. Now what happened next is a big upside here. Okay. And we say that this is a stage 2. All right. Now what happened here? Do you see a range here? You see a range? I also see. So we say this one has a stage. What stage it is? It is a stage 3. Okay. So this is a stage 3. And what happened that? It is the decline. Okay. And we say it is stage 4. Okay. So what happening now? We have to see what is happening now. We will see and we'll let you, and we will have to evaluate. Is it a stage 1 that we are happening now, or we have to evaluate that? Okay. So this is stage 1, stage 2, stage 3, and stage 4. So I think this one must be very clear. Okay. Every company goes through, every stock goes through this particular stages. Okay. Well, let's take another example. How about HUL, Hindustan Unilever. Okay, let remove the drawings. So can you see where the ranges, where are the stages? Can you see the stages here? Okay, try to find the stages here. I will just zoomed out. Okay, find a stage. I will give you 10 seconds to do that. Okay, so we clearly see there's a range here. Okay, so this is just stage 1. Okay, we clearly there's an upside from here to here. Okay, we say this is a stage 2. Okay, really we clearly see there's a decline that is also in the range wise. You see there's a nice range. Okay, this is one range, this is one, this is another. Okay, this is going in a range. Okay, we can say this is a decline or stage 3. Okay, and then there will be a decline.